Hello and welcome to the Accendo Traders Group. This is our weekend wrap-up trading plan for February 20th, 2010. Our website is blog.accendotraders.com, where we put together effective video technical analysis trading plans on a daily basis. Trading plans keep you focused, centered, let you know what's coming down the market, both for your open trades and as you're scanning for new trades. But by focused and being disciplined, it cuts down on your research time and you have time to spend with your family. Well, the week that was certainly was a good week. It was a shortened week, as you know. We only had four sessions, and the market ended up 300 for the Dow, and 33. And if you remember our video last week, all of the markets are basically down 3 to 5%. You can see now we're just fractionally down. So certainly something to be excited about or happy about if you are long. Again, the market was able to garner out gains for the sessions. All of our sectors ended closed unchanged or higher. The big thing for the week was the minutes of the FOMC, where they basically said that they're going to continue to keep rates low, but at the same time they did raise their discount rate to 0.75, I believe, Thursday after the close. And again, here's one of the things that's important about not having a bias and being neutral, in the sense that strengthens the dollar, which usually means a weaker market. And yes, the market was down pre-market on Friday, because again happened after the close on Thursday, but the market did close higher on Friday. So again, especially as a futures trader, you just want to trade the moves, but even as a normal stock options trader, you don't want to go into the market with a bias. You want to continue to be neutral and trade what the charts give you. Although the dollar did show some strength, the market still was able to continue to go higher. And then the earnings and economic data really wasn't impactful at all this week. Basically, we had Deere and Hewlett Packard and Walmart basically topped their earning estimates, but nothing that was blowing out of the wood. And then of course their targets weren't exactly blazing a trail either. Same thing on the economic front. Although jobless claims did come in higher than anticipated, again, you initially would think that would push the market down, but it didn't. It did temporarily, but there was a rally. Also, we had housing starts that came in higher than expected in CPI, but overall, again, not really moving the market. So what do we have this week? Well, we do have GDP coming out this week, so that certainly can move the market. Going into Monday's session, we really don't have any economic news nor earning news that can move the market. Even throughout the week, we don't have a lot of earnings that's going to move the market. A couple split plays just for those who are interested. But again, GDP will probably be the strongest move as we wait for next week, the first week of March, we get some new job numbers. Okay, so although we had the same introduction on this video, we're going to focus in on futures. And we have our Dow E-mini futures, the YM, and we're looking at the market internals, the market breadth. And what we've been talking about is for the past couple of weeks is the curve that we saw here. So our internals look good. Still haven't technically gotten a buy signal for our internals, but overall the market looks good as we either again come to make a double top, or we're going to make a new swing higher low. So market still has to tell us what it wants to do, but you can see as far as advanced declines, we turned over from 4 weeks of negative. Actually, that is 4. And we've turned positive. So the internals look good for right now. Okay, now we're going to lower down our time frame to the daily chart, still looking at the YM. And we're going to look at a couple things. First of all, we're looking at the consolidation that we saw back in November, December, here at the 10,200 level. And what we talked about in our video last week was what would happen when the market broke here. And the other thing that was correlating around here was the 50 moving average. What would the futures do at that point? Now the top of that consolidation period for our November time frame is 10,500. That's basically where all these wicks are right here. So Um, that is our next target for the Dow futures to the upside. However, there's a couple things to look at. Um, First of all, we talked about in our last video on stocks that most of this move was on lighter volume, excluding Friday. The other thing to look at, it's actually on the positive side, is we had this break. Now you can look at it two ways. One way is right here, or we can kind of go this way right here, and this kind of shows that once we broke above this week, once we broke above this downtrend line, we had a nice up move, push forward, and that's really, Tuesday, Wednesday, Thursday. I'm sorry, Thursday, Wednesday, Friday, if I can get my days right. So that's certainly a positive. But again, where we are right now is right below two things, right above the consolidation 2,500, and this swing low right in here is also where we are. So we certainly have some resistance above us, and so we do need to have some buyers come in to keep us moving higher to continue this swing high, or again, it's just going to be a higher low. Next, let's go ahead and switch over from the daily, go to a longer time frame. We'll go to the monthly chart. And you can see a couple things. First of all, you can see that our little line means nothing on the monthly chart, so we can get rid of that. The other thing we can see is the strong resistance of the 50 moving average. So again, on the monthly chart, we definitely have the strong resistance of the 50 moving average. Now, Dave Elliott teaches the ice hole failure method, which is you push down below and you come back up. And then if you fail at this moving average, you're going to make a new swing low. Well, that certainly doesn't do good for the market, but it's certainly something to be aware of. The other thing to see is that, again, our 50 moving average takes us with the beginning of this big push down. And so, again, breaking above here, we're certainly very bullish. So, again, we have 10,500 for our next resistance level. And then we have the 9,700 below us. And we also have basically 10,000. I believe we talked about 10,060 as an important support area for the market. Okay, so now we're going to go ahead and get into the education portion of our video. We talked about this in our last video, but we have time here in our futures video. We're using the book Trading in the Zone by Mark Douglas, Thinking Like a Trader, and creating a belief in consistency. And this is part of the mechanical stage of trading. And the last video we talked about this belief that I am a consistent winner. I can be a profitable trader. And although it sounds touchy-feely, it is important to have that belief, because again, your psychology, your mindset will see what you want to see. Your ability to think like a positive person, a positive trader, and you will see the positive. But once you start having a negative outlook on your life and your trading, you will see those negative things. And also, you will tend to block out those things that are positive. So part of achieving that goal of being a consistent winner is breaking that down into subsets. And here Mark breaks it down into 7. First and foremost, I objectively identify my edges. Again, do you have a trading plan? Do you have a set of rules, criteria that tells you when to get in and when to get out of your trades? Do you predefine your risk? Do you know where your target is, and do you know where your stop is? Or if you're like me, do you have an automatic stop every time you're in a trade? Do you define your trade? Do you accept the risk? Do you understand that being stopped out is just the cost of doing business? It is not a vendetta against you. It is not, the market's out to get you. It's just the cost of doing business. Sometimes the trades work, sometimes they won't. But we know that when we properly have a trading plan, the probabilities of our edges will have us winning more than the cost of doing business. Being able to execute a trade without hesitation is another key. And paying yourself. Do you have a system that at the end of each week, at the end of each month, whatever your system is, that you're actually putting money into your personal account outside of your trading account? Because when money gets intermingled there, commingling, that's when bad things happen. So money management system. And finally, do you monitor and make adjustments based upon current market conditions? And do you understand the need for all of these in order to be a successful trader? So you guys know about our partners. We have a futures trading room, 10-day trial at $30. We're going to start sharing what we've done each week. You know, the market was closed on Monday, Tuesday $1,300, Wednesday $300, Thursday $1,100, and then the lead trade caller was not in the room on Friday. You know about our futures broker, intraday minis as low as $300, and if you sign up through us, you can get 20 free contracts. Hey, that's $200. So we have a link to the room, and we also have a link to the demo the platform if you want to try out some of the platforms first. Certainly, as you know, you should be paper trading before you should be trading. So the demo platform I highly recommend. And then we have a future trading plan, again, to help jumpstart your move into trading. We want to thank you guys for watching. Remember, trading is difficult, especially emotionally. You can lose all your money. And I will see you guys next time.